Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh dan salam sejahtera. Selamat datang ke sidang akhbar pada kali ini. Pada sidang akhbar pada hari ini, Bank Negara Malaysia akan berkongsi analisa kami tentang pelbagai isu dan perkara yang terkandung dalam laporan kami iaitu laporan tahunan, laporan tinjauan ekonomi dan moneteri serta tinjauan kestabilan kewangan. Analisa ini merangkumi prospek pertumbuhan ekonomi dan inflasi serta keadaan kestabilan sektor kewangan negara kita. Please allow me to continue in English for the benefit of all our audiences. Let me begin with a quick recap on Malaysia's macroeconomic performance in 2024. Malaysia's economy recorded a strong growth of 5.1% with a low and stable inflation of 1.8%. This places Malaysia as one of the top performers among regional and comparator economies. Importantly, all sectors of the economy expanded, driven by resilient private consumption, robust economic investment activity, and also a rebound in exports. Building on the momentum from last year, the Malaysian economy is projected to grow at a resilient pace of between 4.5 and 5.5% in 2025. This growth will be driven by sustained domestic demand, despite external uncertainties leading to a more moderate expansion of exports. I should mention, we are currently facing a highly uncertain global operating environment, and our baseline forecast range is premised upon conservative assumptions on relevant variables such as income, energy prices, and also world trade. And of this, world trade is subject to a high degree of uncertainty given the ongoing tariff tensions and also geopolitical developments. What we have done is to build a rise in US effective tariff, meaning overall percentage of import duties that the US collects on its imports. And this is guided by measures that have been announced and our internal assumptions on the timing, duration, and also coverage into our baseline forecast. I must stress that conditions remain highly fluid. The potential for escalation or de-escalation of tariffs and geopolitical conflicts are factored into our downside and upside risk to this baseline growth projection. Headline inflation is expected to average between 2% and 3.5% in 2025, reflecting the potential upside from domestic policy measures. Nevertheless, we expect inflation to be manageable in line with the easing global cost conditions and also the absence of excessive domestic demand pressure. Let me go a bit deeper into our analysis. On the global front, for our baseline, we expect global growth and trade to be broadly sustained in 2025. The global economy is expected to expand between 2.8% to 3.3%, and this is aided by positive labor market conditions, moderating inflation, and less restrictive monetary policy. Meanwhile, global trade is expected to grow between 2.7% to 3.2%. The outlook for global growth and trade is also subject to considerable uncertainties surrounding tariff and also other policies from major economies and geopolitical developments. Such uncertainties could also lead to greater volatility in the global financial markets. Despite the global uncertainties, domestic demand will sustain our growth. We have favorable initial conditions. We have good fundamentals. Those are providing a cushion against any potential external shocks that we may face. Several key factors explain the strength of domestic demand. First is higher household spending will be driven by income growth, healthy balance sheet, and also continued policy support. Second, the investment upcycle with the realization of approved investments and national master plans. And third, government initiatives on civil servant salary adjustments and also continued progress of the public infrastructure projects. Let me explain these three factors in detail. In 2024, we observed several interesting household consumption patterns. For example, car sales made a new all-time high of around 815,000 units compared to 2023, which is about 799,000. Spending on restaurants and hotels grew by 11.8%, above the long-term average of 7.1%. Malaysians also continue to travel and spend abroad, registering a year-on-year growth of 15.1%. If you look at the average between 2011 to 2019, it's about 7.7%. So it has almost doubled. And in short, household spending has been really forthcoming. In 2025, household spending will continue to be the anchor of our growth and is projected to expand at a faster pace of 5.6%. This improvement in private consumption will be supported by brighter income prospects. One measure of income, which is the compensation of employees, this is expected to improve amid the higher labor utilization. Growth of mixed income, which is the income from own small businesses or the self-employment, including the gig economy, is also projected to remain strong this year. Government measures such as the salary increment for the civil servant and the higher minimum wage will also lend further support to the overall income growth. These measures will positively affect at least 4 million workers in 2025. The growth in income in 2025 will also be facilitated by the improving labor market conditions, despite wage growth being quite modest in 2024 compared to previous years. The continued expansion in employment will support household spending this year. Additionally, the labor force participation rate has also reached its historic high of 70.5%, while the unemployment rate is low and is projected to decline to 3.1% in 2025. Investments will continue to be a bright spot in the economy. Total investment is projected to expand by 9.3%, underpinned by sustained external and domestic demand conditions, positive investor sentiments, firms' continued access to financing, as well as the ongoing project realization. Investment intentions remain forthcoming, with approvals reaching 378.5 billion in 2024. In 2023, it was 329.5 billion. And out of this, domestic players contributed to a larger share of the approved investments. And this reflects local business confidence in Malaysia's long-term economic prospects. This is expected to provide resilient support to investment as sustained domestic economic activities, together with strong domestic investment ecosystem, may help cushion against all the external uncertainties. Of significance, we need to note that 84.5% of the manufacturing projects that was approved between 2021 and 2024 are actually being implemented now in various stages, from production to factory construction and machinery installation. We owe this faster implementation to better facilitation on the part of various agencies of the government. In the Economic and Monetary Review, we feature a box article or a special box article titled Deciphering Investment Cycles in Malaysia. Since mid-2023, Malaysia has been experiencing its third investment upcycle. Notably, this current upcycle is pivoting towards quality investments which will raise Malaysia's growth potential and sustainability. Let me highlight a few key takeaways from this article. First is that compared to the second investment upcycle, which is between 2011 to 2015, the third upcycle is characterized by a larger share of investments in high value-added activities such as E&E manufacturing and ICT services. Second, the current upcycle sees higher investments in machinery and equipment, which will boost our productivity. Third, the private sector is also playing a more significant role in this current upcycle in driving investments compared to the previous upcycles. Looking ahead, Malaysia should prioritize policies to sustain this investment momentum and, more importantly, to maximize the spillovers to the domestic economy. I will encourage you to read this article, which offers some insights into the dynamic of the current investment upcycle. I promise you it's a very interesting article, and you don't have to ask ChatGPT for a summary because it's already concise enough. As global uncertainties weigh on trade, the pace of Malaysia's exports will also be more moderate. Furthermore, commodity-related exports are expected to be lower due to the planned maintenance in the oil and gas sector. Nevertheless, our diversified export products and markets will provide some cushion against all these external shocks. The global tech upcycle is still ongoing, with strong demand for AI, cloud computing, and related peripherals, and this will positively support our E&E exports, especially semiconductors, which account for 25.7% of Malaysia's export. As the sixth largest semiconductor exporter, with 7.3% share of the global market last year, Malaysia is actually well integrated into the global supply chain. In addition, tourism is also expected to play a more significant role this year. Tourist arrivals and receipts are projected to surpass the pre-pandemic levels this year. And this is fueled by the improved flight connectivity, the extension of visa-free policies, and also the promotions leading up to our Visit Malaysia Year 2026. We will also benefit from the higher global travel demand. For example, the World Tourism Organization projects international tourist arrivals to grow between 3 to 5% in 2025. So therefore, this will definitely support our tourist arrivals as well. The topic of semiconductors has been grabbing headlines of late, and this year we feature a box article entitled Malaysia's Position in the Global E&E Value Chain and Prospects. Over the past 5 decades, Malaysia has emerged to become a critical hub for E&E production. And about 2/3 of our E&E exports are comprised of semiconductors, which are highly complex and integral for the modern economy. Despite the ongoing geopolitical uncertainties and concerns surrounding tariffs and trade restrictions, Malaysia's E&E exports are expected to remain resilient amid the global demand for semiconductors and also devices. And this reflects the pivot towards the widespread technology adoption, AI-enabled devices, new capacity for cloud computing, and also online services. As the global race for semiconductors intensifies, it is imperative that our domestic E&E industry capitalize on emerging opportunities through the right strategies by investing into ecosystem enhancement, developing a deep talent pool, and also encouraging more innovation. We also invite all of you to explore the insights in our EMR box articles. Make sure you read, okay? Sorry, I have a lot of homework for you all, I think. Reading homework for you all to do. And moving on, the current account of the balance of payments is projected to sustain a surplus in 2025, ranging between 1.5% and 2.5% of GDP. And this will be driven by higher goods surplus and also lower services deficit following the continued improvement in the inbound tourism. The government is also proactively considering measures to sustain the current account surplus in 2025, which include enhancing our export competitiveness, reducing import reliance, and also advancing the tourism sector. Now, let me turn to inflation. Both headline and core inflation continue to trend below the long-term trend, averaging at about 1.8% in 2024. And going into 2025, we expect inflation to remain manageable. While domestic policy measures such as the fuel subsidy rationalization may introduce some upward price pressure, these are expected to remain contained, given the broader environment of moderating global costs and the absence of excessive demand-driven inflation. Despite the moderation in overall inflation, cost of living concerns persist. We acknowledge that. And it is important to recognize that the cost of living is shaped not just by price levels, but also by income growth. As you can see in the right-hand side of the slide, since 2019, nominal wage growth has lagged behind the price increases, hence eroding the purchasing power, and particularly for the essential goods such as food. This impact is most pronounced among lower income households who allocate a larger and increasing share of their income to basic necessities like food and housing. Put simply, for every 100 ringgit the B40 earned in 2022, 52 ringgit was channeled, or more than half was channeled towards basic needs, affecting their ability to spend on important services such as insurance and financial services, as well as on discretionary items. For more on the cost of living and its potential policy implications, please have a look at our annual report 2024 box article entitled Curbing Inflation, Easing Costs, the Policy Perspectives. In discussing the risk to growth and inflation, I must stress that we are now facing heightened uncertainties. In particular, there are considerable external uncertainties surrounding the growth outlook. On one hand, upside potential could come from pro-growth policies in major economies, greater spillover from the tech cycle, and also faster implementation of investments projects. There are, however, downside risks that we need to consider, and this may stem from the more restrictive trade policies and how other countries react and retaliate, escalation of geopolitical conflicts, weaker confidence, and also commodity production disruptions. The materialization of these risks will determine where we end up in our forecast range of between 4.5% to 5.5%. As for inflation, the upside risk remains dependent on the extent of spillover from domestic policies. And notably, should domestic demand turns out to be stronger, there is a tail risk that policy effects could drive higher inflation expectations, leading to a more pervasive price increases. Externally, uncertainties surrounding geopolitical tensions and trade developments pose risk to global cost conditions. Moving on to monetary policy, for this year, monetary policy remains focused on maintaining an environment of price stability that is conducive to sustainable economic growth in Malaysia. Amid global policy uncertainties, we are following these developments very closely and we remain vigilant against potential spillover effects on the Malaysian economy. And going forward, our monetary policy approach will continue to be data-driven amid the evolving economic landscape. Monetary policy will continue to be guided by the balance of risks surrounding the outlook on Malaysia's inflation and growth. Moving on to Ringgit. The Ringgit recorded an overall appreciation of 2.7% against the US dollar and 7.5% on a nominal effective exchange rate basis, or NER, against Malaysia's major trading partners. Year to date, as of 31st March 2025, the Ringgit has appreciated by 1.1% against the US dollar and depreciated by 0.02% on NER basis. Going forward in 2025, foreign inflows following narrower interest rate differentials between Malaysia and the advanced economies, these are expected to lend support to the ringgit. However, the downside risks arising from fewer Fed rate cuts and uncertainties over the impact of US trade policies, this could also weigh down the ringgit. Despite the continued influence of external factors on the ringgit's trajectory, Malaysia's favorable economic prospects and the domestic structural reforms that we are undertaking are expected to cushion against these external shocks. The ringgit's value continue to be market determined, and Bank Negara Malaysia will remain committed to ensure an orderly functioning of the domestic foreign exchange market. Moving on to financing conditions, credit to private non-financial sector expanded by 5.2% in 2024. In 2023, it was 4.8%, and this is driven mainly by higher growth in outstanding loans. Business loan growth recorded higher growth at 5.1%, and primarily following an increase in loans for investment-related purposes due to the robust investment activities. And household loan growth was also sustained at 5.9%, and this is supported by the labour market improvements. And going forward, financing conditions are expected to remain supportive of economic activity, and this will be underpinned by banks' capacity and also their continued willingness to lend to the economy. In 2024, financing by banks and DFIs remain supportive of SMEs' business needs, with continued growth of outstanding financing at 8.1%. Disbursements and repayments for SME financing, both for working capital and investment-related purposes, was sustained at high levels due to the improved business conditions and the positive economic outlook. We have also observed stable financing approval rates that is exceeding 80%. During the year, new SME financing approvals remain at a high level, with notable improvement, particularly for the construction sector. The Malaysian banking system remained resilient, with healthy levels of capital and liquidity buffers to navigate through the uncertainties ahead, and at the same time to support the credit intermediation to the economy. As usual, we also assess our banking system through our annual stress test exercise. In this exercise, our banks are subjected to two distinct stress scenarios. One is a severe economic shock scenario, and the other is protracted low growth operating environment scenario. And both scenarios are more severe than what we observed during the GFC and 2020 pandemic. And this is intentional. The stress test results reaffirm that our banking system is sound, with total capital ratio remaining well above the minimum requirement of 8% under adverse scenarios. And sustained economic growth and favorable labour market conditions have also had positive impact to borrowers' repayment capacity. Overall, business, including SMEs, show signs of sustained resilience against non-repayment risk as firms maintain healthy liquidity buffers amid the elevated cost pressures. Households' debt servicing capacity remains resilient, supported by healthy balance sheet and prudent underwriting standards by our banks. However, with the increasing availability of non-bank credit facilities, the well-being of household consumers remains our top priority. The recent tabling of the Consumer Credit Bill 2025 in the Dewan Rakyat aims to establish a Consumer Credit Commission to oversee various credit businesses, including the BNPL providers that do not fall under Bank Negara Malaysia's purview at the moment. And this will strengthen existing regulatory and supervisory arrangements, ensuring fairness, transparency, and also protection for non-bank credit consumers. Moving on, financial capability and inclusion remain key to long-term financial well-being. The Financial Inclusion Framework KPIs are developed to measure financial inclusion progress across three key dimensions, namely in terms of access, usage, and capability. And these KPIs are intended to enhance transparency and align the industry's efforts towards achieving common financial inclusion goals. The second national strategy for financial literacy will serve as a holistic roadmap to elevate financial capabilities, strengthen financial resilience, and enhance financial well-being among the Malaysians. It focuses on 5 strategic priorities, each designed to address financial needs at various life stages. The NS 2.0 is set for final publication in the fourth quarter of this year, building on the discussion paper that was published earlier in February this year. We encourage everyone to actively promote, support, and take part in the NS 2.0 initiative. Let me touch on Islamic finance, which has continued to support critical development needs such as affordable housing, climate transition, and funding for small businesses. We are enhancing our regulatory frameworks to spur value-based innovation, and we collaborate with the industry to facilitate pilot programs and implement better impact reporting. Over the next 3 years, efforts will be directed towards strengthening the fundamental of Islamic finance ecosystem to support sustainable economic growth. And this entails sharpening Malaysia's proposition as an international gateway for Islamic finance, advancing Islamic financial markets development to enhance market liquidity and grow Sharia-compliant investable assets. And third, mainstreaming value-based finance in the overall financial system through impact-focused solutions and sound financial conduct. This year, through the Malaysia's ASEAN Chairmanship, the bank is actively working to unlock the potential of new growth sectors by integrating Islamic finance with sustainable and green finance initiatives. And at the regional level, we believe that innovative financial solutions using the diverse Islamic financial instruments have significant potential to advance the decarbonization agenda of the ASEAN countries. Let's move on to digital payment safety. Our efforts in combating financial fraud have shown positive outcomes, as phishing and malware scams reported to BNM have seen a downward trend. This is positive development. And in order to preserve public confidence in the use of our digital payment systems, Bank Negara Malaysia continues to champion efforts in combating scams. One key priority was to strengthen protection afforded to victims of online banking fraud. Built on the principles of transparency and joint accountability, an enhanced framework was developed to ensure fairer outcomes for both the victims and also the banks. Although it was only implemented in October last year, early observations have been positive. Banks have doubled up their efforts to enhance investigation procedures and adopt a fairer compensation approach in line with Bank Negara Malaysia's requirements and also expectations. For this year, our focus will continue to be on ensuring banks effectively implement this framework to safeguard customers' interests. In line with Malaysia's whole-of-nation approach, we are also exploring to expand this framework to other key players such as the telcos and also the e-commerce platforms to secure a safer digital ecosystem for the country. We remain committed to advancing the climate agenda as well and strengthening climate resilience. And this is also important as Malaysia confronts severe physical impacts of climate events. Encouraging progress has been made by the financial institutions with increasing offerings of green and transition-related financing solutions. And these have facilitated SMEs to kickstart their transition journey towards green and sustainable operations. We also partner with the financial industry to decarbonize the economy through the Joint Committee on Climate Change, or the JC3, which we co-chair with the Securities Commission of Malaysia. The JC3 has been instrumental in developing tools, guidance, and also framework to facilitate the financial sector in managing the climate risk. The JC3 will continue to serve as a primary platform for driving collaboration and strategic initiatives. In supporting the execution of national policies and roadmaps, the financial sector can further contribute towards the nation's goal of net zero emissions by 2050. To future-proof our financial system and derive greater efficiency gains, Bank Negara Malaysia is actively pursuing initiatives such as modernization of key financial infrastructures and exploration of asset tokenization. A key focus this year is exploring the potential of central bank digital currency or CBDC, prioritizing wholesale CBDC for both domestic and also for cross-border payments. We will also continue to encourage responsible innovation within the financial sector to harness the potential of emerging technologies like blockchain. And to this end, we are working with the private sector, including through the regulatory sandbox, to facilitate the testing of innovative solutions in a conducive regulatory environment. On the cross-border front, we actively collaborate with the Bank for International Settlements, or the BRS, and other central bank partners through Project Nexus and other cross-border CBDC-related projects. These projects have the potential to address existing pain points in cross-border payments, among others, by streamlining certain processes and reducing cost of transactions. We are now at an important juncture for the nation. We have seen some successes of important policy design paired with timely implementation. The first phase of reforms has reflected the fundamental priorities such as improving fiscal discipline, strengthening our prospects for quality investments, and also improving wages. For instance, under the progressive wage policy, entry-level employees earning a median monthly salary of 1,150 in 2024 now receive a median salary of 2,200 per month. And this reflects an increase of about 13%. For the non-entry level PWP employees, the median salary has risen by 9%, reaching 2,400 compared to the 2024 rate that we have seen. While we continue with the aforementioned reforms, we must also focus on other critical initiatives which will drive our continued progress towards becoming a high-income nation. Foremost among these are implementing broader reforms to address rising cost of living, strengthening our social protection, improving the education and healthcare system, and furthering efforts to attract quality investments that can offer higher quality jobs for Malaysians. One area that the bank has been working on is the issue of managing medical inflation. We have written a box article in the annual report detailing the implications of medical inflation to MHIT premiums, strategies to manage medical inflation, and to secure sustainable access to the MHIT. Malaysia has been experiencing double-digit medical cost inflation for some time. You can see from the slide, higher than the global and regional averages. And this has prompted premium adjustments to preserve the sustainability of the MHIT cover. However, ensuring MHIT remains accessible over the longer term requires addressing the root cause of the rising medical costs. And this requires a whole-of-nation approach to deal with. To this end, the bank is working together with key stakeholders, including the Ministry of Finance, the Ministry of Health, the ITOs, the insurance and takaful operators, private hospitals, and consumer groups to implement key initiatives guided by 5 strategic thrusts. Implementation of these 5 strategic thrusts is expected to help contain medical cost inflation, in line with the global trend and results in cost savings. This will help contribute to a more sustainable premium adjustments over the longer term. Across our 3 flagship publications this year, we have a total of 16 analytical box articles on various themes and also topical issues. There are a few here which I would like to also highlight as they provide insights into key interesting topics you can see on the slide. The article entitled Supply Shocks and Implication for Monetary Policy is closely related to the bank's mandate and will give greater understanding on the bank's monetary policy formulation. The article on inflation and cost of living emphasizes the need for holistic policy reforms in addressing cost of living issues. Meanwhile, the article on deepening the Islamic financial market and liquidity management, it offers insights into actions for market development in building a more resilient Islamic financial ecosystem. Please do give them a read. You can find them on our website. I've come to the end of my presentation. A few quick final points. The Malaysian economy is projected to grow by 4.5% to 5.5% in 2025, supported by the resilient domestic demand. And meanwhile, export is expected to expand at a more moderate pace given the global developments. Headline inflation is expected to average between 2% to 3.5%. Risk to the economic outlook remains, stemming from both the external and domestic factors. And finally, the banking sector's capital and liquidity positions remain strong and will continue to lend support to economic activities. Thank you for your attention. My team and I will be pleased to answer any of the additional questions that you may have. Thank you very much.
Thank you, Governor. At this juncture, we would like to call for questions from the media. If you have any questions, please feel free to raise your hand. Our mic runners stand ready to pass you a microphone. Please state your name and publication before sharing your question. We will take your questions in 3 segments. The first on the economy, the second on the financial sector, and the last on other topics. Now, I would like to invite questions from the floor on the first segment, the economy. We will take a few questions in one go. The lady in the middle here.
Hello, Governor. This is Ying Xian from Dow Jones Industrials. Like to know, since there is a growing consensus on a potential U.S. recession, and how do you see the impact on Malaysia's economy, and how is Banegara preparing for the potential spillover effect? Thank you.
Can I have another question? Okay, the lady here in front.
Hello, Blin from Manama. BNM total asset decreased 1.61% to 621.45 billion as of December 31st last year. What contributed to the decline?
Maybe I'll take that question later. We'll do economy first. I think since you asked a question on, US, perhaps maybe let's focus on that area and our economy. Later on, remind me if I miss it, but I will answer your question about total assets at the third part of the questions.
Yeah. So, any other questions on economy? Okay, Bloomberg here in the front.
Do you want to go first?
Hi, I have one question. Right now, when considering monetary policy, is the central bank's biggest concern growth risks or inflation risks?
Hi, Governor Daniel from Reuters. I'd like to know if, over here. Hi, Governor. I'd like to know if BNM has quantified the trade war risks and factored that into the growth forecast, given that economic growth forecast is still unchanged from the budget announcement last October, and as well as if it's been factored into exports forecast, since the exports are close to what it was last year. Thank you.
Okay, Governor, maybe you can take these 3 questions first.
these three questions because I'm going to be a bit long here because I think it's important to address in terms of the concerns, especially regard to what's happening in the US and how this could have an impact on us. Also in terms of our growth range of between 4.5 to 5.5%. And I also cover your question on the monetary policy later on. I think first let's look at the US. I think at the moment things are really highly fluid, almost like a moving target. And I think I'm sure you all know this very well. There are considerable uncertainties on the final tariff policies on which country, what product coverage, and also at what rate. I think these are the uncertainties. Then what would be the retaliation from all the countries that face this tariff? So what we did is that we look at the effective tariff rate that the US imposes on its imports now, and we tripled it. This is roughly equivalent to about 10 to 20% rate on countries like Canada, China, Mexico, and even the Euro area, covering between 50% to 100% of their goods. We also built some retaliations from these countries. And all of this will affect the US growth. All this will affect global trade. All this will affect the financial markets as well. And we built all this into our baseline forecast. Now, let me just touch. I think when we built our forecast, I think we built in with a healthy degree of conservatism and also, more importantly, realism. I think we see domestic demand to remain resilient. We have to acknowledge that. I think we are starting from a position of strength. We have a very strong domestic demand. And this will continue to support our growth. First, let's start with the private consumption. I think I highlighted in the slide just now. This is the anchor of our growth. We see slightly higher growth in PC this year at 5.6%. And this will be supported by trends in income and also employment. If we look at, I think we factored in the COE, the compensation of employees, growth of between 5.8 to 6.8% for this year. And it's better than last year's income. Second is that we also have positive labor market conditions. As employment continues, unemployment is very low now at 3.2%. In fact, it's lower than the pre-pandemic level. And our labor market participation is at historical high at 70.5%. So all this will support our consumption. Then we've got the government policy measures. For example, the wages. I think, for example, raising minimum wage and also civil service salary increment. And all this will support income and consumption. At this point of time, I see it a bit difficult to see layoffs or any big shocks to income that will affect our consumption. So that's number one, consumption. Second, there's investment. I think it was very strong last year, and the momentum is likely to continue this year. Projects that have started will not stop. I think it will go on. And projects are coming both from the foreign and also domestic investments. I think it's very important to note that. For domestic investments, we have civil engineering projects from utilities to railway to highways. These are infrastructure projects, and this will continue. And for the private sector domestic investors are also providing the support to us. I think from projects in automotive, transport, and logistics, as well as green investments. I remember, I think Malaysia is a highly diversified economy. We also produce commodities, and again, we are building a modest projections here for, I think, brand prices and CPO and also others. And we also have support from export. It will still be there. Although it may moderate, I think export may moderate, but it will not crash. And we also have tourism that will support us. Last year, we got good support from tourism, and this will also continue this year. In fact, as I shared just now, I think the World Tourism Organization expected tourism to even grow higher this year, and we will benefit from that, coupled with all the measures that we have put in terms of visa-free and our Visit Malaysia year, 2026. So people start to come, I think, this year. And we're also chairing ASEAN this year. That will also encourage more tourists to come into the country. So all this actually shows that our domestic economy is resilient, and this will be the best support to the economy. And so these are the factors that we take into consideration in coming out with the projections rates. Having said that, we do acknowledge. So that's why we have the range. If the upside risk materialize, we may be higher. If the downside risk materialize, we may end up at the lower end of uh, the growth range. So that's on growth. I think on monetary policy, our main aim for monetary policy is really in terms of to ensure price stability with ensuring conducive to sustainable growth. So these are the two elements that we look at. And in our assessment, when we do monetary policy, we always assess the balance of risk to both inflation and also to growth. A balance of risk to outlook of growth and also inflation. So these are the two elements that we look at both. And we have seen in terms of when I shared the growth outlook, I also highlighted in terms of what are the downside risks and upside risks. I also highlighted in terms of the inflation, where are we, where we will be, and what will be the upside and downside risks. So we'll take into account all these considerations in our monetary policy. Sorry for the long answer, but I thought it's very important. I'm sure there are many other questions coming on growth. Perhaps I think I'm preempting those questions.
Okay, can we take another round of questions on economy? The gentleman over here.
Governor, from Business Today. Over here, yeah, hi. Just one question. You've painted a very interesting picture in terms of the robustness of the domestic economy and potential areas that can actually boost the economy. What are some of the challenges or risks you see that could hinder some of the projections that you've put in place?
Any more questions on economy? Okay, the lady behind there.
Hi, Governor. I'm Shavika from The Age. I have one question. Oh, okay. I have one question. Is there any possibility for BNM to cut interest rates amid escalating trade tensions? Thank you.
Okay, another one more, if there is any. Okay, here.
Hi, Gloria from the Malaysian Reserve. Asking somewhat the same question. Is expected, US Fed is expected to cut the Federal Reserves. To have cuts. But what's your preparation, BNM's preparation for the Fed cuts? We know that the Fed acts independent of Trump, but they have factored in Trump's tariff reactions from other countries. Thank you.
Okay, Governor.
From the slide, we have identified what could be the downside risk, what could be the elements, factors that could actually derail growth. For example, I would say more of it coming from external. The more restrictive trade policies, for example, and the stronger retaliatory measures by countries that could also affect global trade and affect global growth, and that could also have an impact in terms of our Malaysian growth. Second is that escalation of geopolitical conflicts. That could also have an impact in terms of supply shocks, and that would have in terms of impact on inflation, and that could also impact growth. Third is that given all these developments, uncertainty and the rest, it could also result in weaker business sentiments, weaker consumer confidence, and they spend less. So this could also affect growth globally and also in Malaysia. And finally, in terms of the lower than expected commodity production. For example, like last year, sometimes we have some disruptions in terms of oil and gas industry. If the disruption happens more than what we projected, then of course that could also affect in terms of our growth projection domestically. So these are some of the downside risks or the potential risks that could derail our growth. So that's in terms of risk to growth. In terms of BNM cutting rates, I think it's a very, very interesting question. As I said, monetary policy is forward-looking, and we are guided by our mandate to maintain price stability and also conducive to sustainable growth. At this 3% OPR policy rate, it remains supportive. and it's consistent with our current assessment of outlook of inflation and also growth. And for the MPC, it continues to remain data dependent, and we'll keep close watch on the evolving conditions. For example, the global, the tariff, the MP stance of other countries, and also the domestic policy measures. How does this impact in terms of our assessment on inflation and growth outlook? And so this is where we'll look in terms of, for the price outlook, for example, in terms of how pervasive and how persistent, for example, price increases, whether there are demand pressure that's coming in before we act. So these are the areas that we'll be looking at, I think, in terms of, that will guide us in terms of decisions for monetary policy. By the current rate, it is actually appropriate and supportive for the economic growth. So that's in terms of the in terms of monetary policy. I think to your question in terms of if Fed cuts rates, actually our monetary policy is domestic driven. Basically, we look at the domestic conditions, not so much what happened elsewhere. What happened elsewhere, we look at it in terms of how would that development have an impact on our growth and inflation. That's what we look at. Not so much of who cut and who doesn't cut. Yeah? It is in domestic considerations that we look at. And I say that we remain focused what's best for our economy. So that will be our guiding principle. And I think the MPC meets 6 times a year. And every time when we meet, I think we reassess the data and also the outlook comprehensively. And every decision reflects the latest evidence and our mandate as well. What are the new data points that's coming in? What is it telling in terms of the outlook for inflation and growth? And what would be the best appropriate rate for the economy? So that's how we look at the monetary policy. Thank you.
Let's move on to the financial sector segment. Is there any questions from the floor? Okay, GG Press. Yeah.
Thank you very much for the presentation. This is Seiichi Oshima from GG Press. There was a mention about tokenization in the report, and Security Commission Chairman happened to have mentioned about the possibility of introducing security tokens in their talk with Kazana last week when they had a press conference last week. And how do you see the possibility of introducing security token to MGS? And can you share us with any time frame if you have anything?
Are there any questions other than this for financial sector segment? Okay, perhaps Governor, you may wish to take this question.
On the digital asset, I think our focus has always been to facilitate this innovation, but we want to facilitate this in a responsible manner. Because our priority is really to ensure that financial stability is maintained and consumer protection is there while we promote innovation. And we have been working with, I think, global regulators, and also we explore potential of the underlying blockchain technology to future-proof our Malaysian financial system. For example, central bank digital currency. So that's one area that we're looking at, and also asset tokenization. I think what the SC has highlighted, I think, is something that is also in line with what we are doing. In terms of timeline, I think we are not in a rush to do this, because I think we want to make sure that we provide the right platform for this to happen. But at the same time, we have all the appropriate guardrails and safeguards to ensure that I think this will happen or will develop and evolve in an environment where consumers are protected, stability is maintained, and it has benefits for the country and the economy. So that will be our principle in terms of dealing with digital assets. Thank you for your question.
Okay, we have only 3 minutes left. Can we move to the next segment on other topics? Perhaps one just now on our total asset. Are there any? Okay, here at the gentleman here.
Okay. I think total assets, your question just now, is partly because of our monetary operations and also because of the strengthening of the ringgit. So that's partly reflecting why I think our total asset has come down. I'm not sure whether anyone else wants to add to that, I think. That's all right. Yeah, that's the answer to your question.
Okay, sorry, the gentleman
Sorry.
over here wanted to ask.
Sorry. I think the China wants to. Huh? Okay, all right.
Yeah, from Business Today again. I just want to ask a bit on the financial segment. There's foreign investors are leaving the markets. I mean, in terms of the capital market, and also there's been some sell-offs on the MGS bonds. Any comments on the reactions of these foreign investors leaving the markets this way?
Great question. Maybe I'll get the Gianna also to come in on this. But basically, we see positive sentiments coming from the foreign investors. In fact, throughout the year last year, I think we do see inflows and healthy inflows, I would say. I think, of course, at times, there are some outflows. But basically, I think we do see inflows into our bond market. And also, towards the end of last year, we see healthy inflows into our equity market as well. And in our engagement with the investors, we are seeing pretty positive signals coming from them in terms of they see the growth prospect of the country is positive. They see that our fundamentals are strong, and they see that our policy certainty in terms of we have a clear path with regard to policy, and this is partly from our national master plans that we have announced and published, which really chart the direction that Malaysia is taking. So all these elements provide certainty to the investors, and we do see positive sound bites from them. You want to add anything, Adnan?
Yes. So what we're seeing in these outflows is mainly just short-term reacting to the high level of uncertainty in global markets, partly because of the reaction to many of the day-to-day policy pronouncements in particular on trade restrictions. So I think going forward, we will probably still see this, but I think as the Governor mentioned, the long-term factors that would support long-term inflows into the Malaysian market is still quite positive, and we're quite confident of that. But in the near term, we have to weather this volatility. Mind you, a lot of the reductions in foreign investor holdings actually have been very short-term in nature, and they could be just switching into other asset classes, for example, in Ringgit deposits, as opposed to outflows from the Ringgit itself. So I think there's a bit of both, but many investors are just taking a cautious stance in the current uncertainty. Thanks.
Thank you very much for all your questions. We have come to the end of our press conference today. Governor, may I invite you to give your closing remarks?
All right, thank you so much for all your questions. At this juncture, allow me to take the opportunity. I want to express my deep gratitude and thanks to the Bank Negara staff for all their hard work. I am incredibly proud to share that I have a dedicated team working with me. I think all those besides me here today and also over there, I think they understand in terms of the importance of our work and the values of communicating this effectively to the public. So this is what we're doing today. And from the production team, from the publication team, the communications team, and to the event team that has arranged for this event today, a big thank you from me to all of you. I would also like to take a moment to extend my heartfelt gratitude to my colleague, DG Jessica, for her 32 years of dedication to national service, DG Jess. And these 32 years has been marked by challenges such as the Asian financial crisis, global financial crisis, as well as the COVID-19 pandemic. I always joke with the Jess that I think we both grow older at the same time, in fact, although I have slightly more white hairs than the Jess. I would like to recognize the Jess' immense contributions to the domestic and international agenda as well. And the Jess, I think, as you embark on your well-deserved retirement, we wish you all the best and enjoy doing the things that you've been wanting to do before this. And I also like to thank you for helping out, agreeing to help out as our technical advisor following your retirement. Thank you, DJ Jazz. Thank you so much. Okay, before we conclude today's sessions, I would like to invite you to several side events and exhibitions at KLCC from 7 to 10 of April in conjunction with the ASEAN Finance Ministers and Central Bank Governors Meeting. Dan memandangkan Hari Raya akan menjelang tiba, saya dan bagi pihak rakan-rakan saya di Bank Negara Malaysia ingin mengucapkan selamat Hari Raya Aidilfitri, maaf zahir batin. Dalam kita membuat persiapan untuk Hari Raya nanti, kami ingin menggalakkan hadirin sekalian untuk menggunakan fit notes ataupun wang kertas yang berkualiti yang sesuai untuk edaran ataupun gunalah e-duit untuk duit raya anda. Fit notes actually use notes which meet the acceptable quality standards for recirculation. It looks the same, feels the same, and more importantly, is valued the same by the recipient who receive it, no matter the amount given. With that, thank you and see you at our next event. Thank you so much, everyone.
Thank you, Governor. Ladies and gentlemen, for more information on our flagship publications, please visit bnm.gov.my/AR2024.